Hello, legacy builders, and welcome back to another episode of the Legacy Pregame Podcast. I am Marcella Mollon-Williams, behavioral financial advisor, mindset coach, and legacy strategist for first generation legacy wealth builders. If you are a business owner and first generation entrepreneur, then this is the episode for you. Today, I am joined by fellow legacy wealth strategist, legacy expert, and my friend, Dr. Ranelli Williams. We are diving into her proven strategies on how to build a business for profit. We're talking about the drivers and what it takes to build healthy cash flow and how to anchor wealth building with strong stewardship principles. Business owners, you do not want to miss this. So stay tuned in. Let me start by introducing you to Dr. Ranelli Williams and just getting to know a little bit about her. Dr. Ranelli is a CPA, certified CFO, Chief Financial Officer, and financial strategist, best-selling author, and sought-after speaker. Originally from Montserrat, Dr. Ranelli built her thriving firm alongside her husband, Eric Williams, helping service-based entrepreneurs scale their business sustainably, master their cash flow, and build profitable legacies without burnout or confusion. As co-founder of ERJ Services and creator of the Wealthy Habits framework, she equips CEOs and founders with the strategic insight to increase revenue, improve profitability, and achieve long-term financial success with clarity and confidence. Dr. Ranelli, welcome to the show.
Thank you so much, Marcella. I really appreciate it. And I look forward to this conversation with you.
Oh, I do too. I'm so glad for the audience to kind of get a peek into some of the conversations we just get to have, you and I, and just what you bring to the world, what you bring to your clients, and to so many more. This is gonna be good. This is really gonna be good. And obviously, you're legacy minded, and so that's why we gel so well. We can have these wealthy conversations. And so I'm looking forward to just helping the help that you can bring to this audience and in all the gems, because I already know they're going to get a lot from you, Dr. Ranelli. This is going to be good. So speaking of how good it is, let's jump into really just understanding who you are. I'm a journey girl. I always say this in the podcast. I'm about what it took for you to be where you are today. Because what it took for you to be where you are today is going to be different than where you are going to be in 10 years. So let the audience know a little about not just Dr. Ranelli Williams, CPA, but Ranelli Williams, wife, mother, daughter, business owner, and just, Montserrat native.
Yeah, so I'll start right there, right? Being Montserrat native. So I was born on a small island in the Caribbean, Southeast Caribbean, called Montserrat. And I spent the first 17 years of my life there, moved to the United States at the age of 17. And I always say, my mom brought me in search of the American dream, right? And, basically, started out, I did 1 year of high school here and then went straight into college. And one of the first things when I got on the college campus, if you remember back then, right, there were all these banks like soliciting the students for to get credit cards. And so that was my experience. And just remember, I was fresh, in the United States 1 year, right? In the Caribbean, we don't, now it's a little bit more so, but back then, credit card wasn't a thing, right? So this was all new. My mom, came from humble beginnings, and her thing was to, give her children the best, but not really teaching financial literacy, right? And so, given the opportunity to apply for credit cards, I did, right? It sounded like a good plan. And I applied and I got not just one, but I got two credit cards. And so here I am in the middle of New York City, um, teenager, credit card in hand, and yeah, I yeah, that very dangerous without the training, right? That most people don't get is, I used the credit cards, and there was a store that I really liked, ANS. And I'm going way back. If people, every Wednesday they had a sale. So it's sort of like a Macy's, right? Every Wednesday they had a sale, and I found myself there every single Wednesday, telling myself I'm taking advantage of the sales, right? And one of the things that I also told myself is, okay, as long as I can pay my minimum balance, I'm good, right? I'm not making payments, making payments, and so it just, it created such a habit, unwealthy habit, very early in my life, that I took that, right into my marriage. So started out life, in debt, in and out of debt, because, by then I was learning a little bit. And so I consolidated and, um, had one big payment, but then I still had the cards, right? And so here I am, just in and out of debt. And that's why I love what you and Mark teach about, um, the difference between, financial intelligence and actually financial literacy, right? Because we can, at this time I'm getting into my accounting career, and so I'm learning about money and finances, but the intelligence wasn't taught. Right, and so we have to couple the 2, and that's why I think that you and I are so complementary, in what we do, because it's so important. So, yeah, there I am. So my career, I would just say I got into accounting. My associates was in business administration. Then I found that I love accounting, and so I did my bachelor's in accounting, and then I have a general MBA, and eventually I went and got my doctorate in entrepreneurship. Spent many years in corporate accounting. And yeah, that's kind of my career side. I mentioned that I did get married, to Eric 20 plus years ago, 23 years ago. And we have 2 sons. And Jaron is 18 and Javon is 12, almost 13.
Amazing. And as I mentioned when I read the bio, that you and Eric run ERJ Services together.
Yes, yes.
So
So that was sort of like an accident, right? So my dad is an entrepreneur. My dad just passed, and I'm sure he's going to come up in this conversation at some point, right? But my dad, was a pharmacist, and then eventually started his own bakery and transitioned from, that into full-time entrepreneurship. And so I had the entrepreneur bug, but I didn't know what direction I wanted to go. And so, that's why I started with business administration as my major, and then realized that I wanted to specialize in accounting. So eventually, friends and family said, "Oh, you're an accountant, you're a CPA, do our taxes," right? Now, in the meantime, I'm not really a tax person. My husband is an accountant as well, and he's the tax person, but people always associate CPA with taxes, right? My background mainly was corporate accounting as well as auditing. But so we started doing taxes for friends and family. And then eventually, Eric got a master's in taxation. And so we kind of leaned into that a little bit more, started the business doing taxes for, other people. And then eventually, when I finally got laid off from my job, I decided to take the leap and not go back into corporate. So I took my severance, invested it in, building out and growing the business. And so ever since then, 10 years ago, um, we both have been full time in the business.
that's amazing. And you're still married and you still like each other.
Oh my
And that's
gosh.
the
That's a whole other story.
Exactly. I mean, I grew up, some of the listeners I may have shared this before, but I grew up in a family business and my parents worked together. So as I'm probably like your children, I watched the dynamics of that. I saw that. And a lot of people would come in to our office and say, how could y'all work together? I heard that all the time growing up. Hearing people ask my parents that, how could y'all work together? Like I could never work with my spouse. So I completely, I
Yeah,
completely
yeah,
understand all that goes into working with your spouse
yeah.
from that perspective.
And I want to just touch on that a little bit, right? I know
Yes,
that's
let's
not
do
the
that.
main part of our
Yeah,
conversation,
let's
but
do it.
I believe that definitely it's a calling. It's a calling, looking looking back, you know, it probably wouldn't have been my choice, right? Because, we Eric and I think so differently, and I think that's a blessing, but sometimes it could be a curse as well, right? Because here's two of us that need to make a decision, and one thinks this way and the other thinks that way, right? But because we are we're Christians, because we believe in God as our third, person in in our business, that we often need to bring it to Him, for direction, and so that is why we're still together, married. That is why we're still running the business together, because we believe, in that God has the final say.
And that is so important. I love that. That was the same reason why my parents worked as well, because God had the final say.
Yes.
And when you understand that calling and you understand who that calling is from, and you're obedient to that, and you understand, you surrender your authority in that, but give it to Him, then yes, it can work. So that's a little
Yes.
marriage advice for these business owners that we're talking
Yes.
today. For I'm sure who many may be also working with their spouse. That's amazing. So let's go into it, because I've had the pleasure of having you as a part of our financial team. You're our CPA, and you really helped us in just really, structuring, getting some things, getting our act together. It's funny sometimes, like you said earlier, people associate CPA with this thing. People may associate being a financial advisor with something else. No, financial advisors need a CPA and need accountability and structure. Okay. And when it comes to
And
matters,
just like a CPA needs a
yeah,
financial advisor.
exactly.
Absolutely. Yes.
Exactly. We don't know it all. We
Right.
stay in our lane and we hire people who are in their lane. And that's how it works. It's always about team. So let's talk about where you are. I love, there are things about you that just allowed me to be drawn to you. Obviously, where you stand spiritually is really important, and that's a huge part of what I love about working with you. Also, you anchor your teaching in principles of stewardship, and it's a mindset that wealth isn't just earned, but carefully managed and multiplied for legacy. And you're all about legacy. So,
Mhm.
how do you guide your clients to make decisions through a stewardship lens?
Yeah.
And it's kind of similar to because the L in legacy pregame framework is legacy lens. It's a way of viewing, looking at how you're planning your legacy. So through a stewardship lens, which to me is the same, how are you guiding your clients, especially when it comes to reinvesting in profits and personal spending? How are you guiding them?
Yeah. So I believe that everything we have been given to us, entrusted to us to manage, right? Which is pretty much what stewardship is, right? Is managing, what was entrusted to us to manage. And so if we, whether it's in our personal lives, in our businesses, if we look at it that way, and we want to be the best managers possible, right? Because that's what a good steward is someone who is going to, really intentionally manage what it is that they have. Then, we can't go wrong, right? And we would make sure that we have all of the information, resources, support that we need, right, in order to make sure that we do the best possible job, right? As business owners, we specialize in our thing, right? So me being an accountant, right? Um, Again, I mentioned, Eric and I run a full service accounting business. So we spoke about the CPA part of it and taxes, but that's not all we do, right? And so even within our own firm, Eric specializes in taxes, right? While I specialize in the CFO aspect of, of the services that we provide, to our businesses. So we have to recognize that each of us, have a specific thing that we're good at, but the business requires more, right? And so as a good steward, I have to recognize that I can't do it all, right? I have to recognize that, yes, I'm great at teaching financial literacy, but I may not be as great as teaching and imparting financial intelligence, right? Though I, have the knowledge of it and I definitely can share that. But, for my clients who need, to go deeper in terms of financial planning, I'm not going to try to do that with them. I wouldn't be a good steward because that's not my specialty. And so I try to teach my clients that, as the steward for this business, it's your responsibility to ensure that things are going well. So the financial aspect of it, you have got to stay on top of that and get the financial resources that you need, your team, helps, us, and, to support you with that. The same way, if you need an additional team member for support, because they might be able to do it better or they're freeing up your time so that you could do something else, then as a good steward, you're going to make sure that you work along with me to help you build out the budget for it, right? Yeah, so it's just being clear on, your role, clear on the outcome that you want to achieve, and then ensuring that you have all of the pieces to make sure that that happens. I know that
Mm.
was a little bit long-winded.
No, no, that was great. You were touching, yeah, no, 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 not at all, because I'm listening, the role I was picking up on, not trying to do it all, understanding your role, as you said. Who do you need? What do you need? Stewardship, as you describe it, is a combination of things that are needed for you to have the clarity to be responsible for what you've been given.
Mhm.
And sometimes we think being responsible for what were given requires only us, like we have to do it. So I love how you framed that. That was so important. And there's a foundation as business owners, there's a foundation that's needed. I mean, yeah, being a steward personally and professionally are the same. It's not, you know what I always say, Dr. Ranelli, how you do one thing is how you do everything. And it's really how you should be doing it. So thank you for that. And I want to now touch on a methodology that I learned from you, profit first. That was like whoosh, for me, eye opening. And I'm grateful for that. And I want to make sure that the listeners really understand this because I feel like it ties into that principle of stewardship
Yeah.
uh, with this. So, you, one thing I picked up from you is your passion for this. There was a shift that happened for you. You were probably doing things the traditional way, revenue minus expenses model. That's what
Mhm.
we were all taught.
Mhm.
And then you found out about the profit first approach and you incorporated it into your business, reshaped how you counseled entrepreneurs to structure their business. So tell us about profit first. Tell us, why is profit the cornerstone to sustainability in your business?
Yeah. So, what we learned in school in accounting, every business owner, I would think, or anyone who had a college degree, at least took accounting 101, right? And so we were taught revenue minus expenses equal profit. Well, the profit first principle actually flips that equation, um, and says revenue minus profit equal expenses. That's a mindset shift, right? Because let's just look back at your P&L, for example, right? There are many times that you receive your P&L and it might show net profit on the bottom, but you don't have money in the bank. And I hear that question all the time. It's like, where's the money? Right? Because revenue minus expenses equals profit, but some of the expenses, actually, some of the spending that happens in your business does not go on your P&L, right? For example, if you have debt, right, that debt is recorded on your balance sheet. And so when you pay down that debt, it does not touch your P&L. Your cash gets reduced and the liability that you have on your balance sheet for that debt gets reduced. So now, because that cash never, that transaction never hit your P&L might be saying, hey, you have net income, a positive net income. However, your bank account says a different thing, right? And so when we lead with profit, the profit first methodology teaches that when you bring revenue into your business, that's one bucket. So I'm going to talk to you about 5 buckets, right? That's one bucket, your income coming in, your revenue coming in. And then you need to allocate that to 4 other buckets. Number 1, profit. So a percentage of that immediately goes into profit. A percentage of that immediately goes for your pay. Because how many times do we as business owners, we work and we work and we work? Everybody else gets paid and you don't get paid. What happens is you eventually resent the work that you're doing, right? Now you're defeating the purpose. The purpose of you not having a job is because you wanted to build something, but you're not even getting paid, right? So first bucket is your revenue. You're going to allocate that to profit. Then you're going to allocate that to owner's pay. Then we're going to make sure that we put aside some for taxes, right? And then your final bucket, is your expenses. And I know a lot of times when people come to us first, and we introduce this, they're like, there's no space. How am I going to do it? It's all taken up in expenses. Well, that's where the financial intelligence comes in, because we need to ensure that we are making priorities a priority, and profit needs to be a priority. You getting paid needs to be a priority, right? And taxes is a
Yes.
priority. We can't, right? We can't get around it. We can certainly implement some things that can lower our tax liability, but we're not going to get out of it altogether, right? Especially if we're running a profitable business, which we want to run, right? And then, it's all about supply and demand, right? if you have less of a thing, you'll use less of a thing. And
Mhm.
so if we already make the expense bucket lower, then we'll just use lower, right? And so I'm going to go back to when I say when people come to us, it seems impossible process, and it can be done, right? So Mike Michalowicz, who wrote the book Profit First, he actually interviewed thousands of businesses and came up with these recommended allocations based on your income. So if you just Google Profit First and allocations, then you'll be able to see the different buckets up to 250. These are the percentage, etc. We won't go through the exact percentages today, but when we work with our clients, what we're doing is, moving them as close as possible to those recommended percentages. Do we do it right away where you're putting nothing aside for profit right now, and the recommended percentage is 10% and we're going to jump to 10% profit? No. Over time, we're going to probably say, okay, let's find 1% that we can shave off your expenses and move that to profit. Lots of times we are spending on things that we don't need to be. We have a million softwares that's just sitting and we're paying monthly subscriptions for that we don't really need, right? And so it's a matter of analyzing, where you're spending your funds, and then working towards really building a healthy business.
Yeah, that's so good. And I hope the listeners really understood this. I do recommend getting the book Profit First. I have mine right back there on my bookshelf. It's like I said, eye-opening, as I mentioned. And I want the listeners to kind of really hear the similarities, because you talked about this process, these buckets for your business, and making expenses the last item, the last bucket, because we will actually learn, your mind will learn to spend less once money is allocated. I would say money has to have a home, has to know where to go and know how to behave. Money itself needs to know how to behave and how to serve you properly. It doesn't do it automatically. And that shows up in our personal life. As an advisor, we're telling you, especially if those who are Christians, you're taught we're tithe and offering, right? Put your
Mm-hmm.
10%, that's what you're taught. And so there's that bucket that you're pulling out. We're teaching invest savings, paying
Mm-hmm.
yourself first, right? Our version of paying
Mm-hmm.
yourself first is through investments,
Mm-hmm.
savings. When you
Mm-hmm.
get that paycheck, your money is finding where to go. The old school envelope system, I
Yes.
was taught too. And then the last thing is expenses. It's
Mm-hmm.
expensive. And then, well, the last is the pleasure, the joys, the fun money, as you call. But you're setting your priorities first to what is not a priority comes at the end. And it's
Mm-hmm.
not because, as you just mentioned, I mean, yes, there are bills to be paid and it can be concerning, but it is about developing a behavior, and
Behavior.
that's the part that you're talking about. That's the part I'm talking about. It's developing a behavior. This is so important, especially for first gen high income earners. When you don't have this type of structure in place, you become a slave to your money,
Mm-hmm.
and you find yourself increasing your cost of living. Expenses will increase as you make more. And this is why there's so many multiple six-figure earners in this country that are living paycheck to paycheck,
Mm-hmm.
because we prioritize our living, our lifestyle. We prioritize our lifestyle over our legacy.
Mm. I
And
love
we want
that.
to shift that. We want to shift. So that's what we're talking about, Dr. Ranelli,
Yeah,
right?
yeah. And Marcella, I do want to just stick a pin here and really say, because I know that there are going to be some entrepreneurs who are listening, and I don't want it to seem like we are not supposed to be spending in our businesses, right? Because just like children need food to grow, right, and be nourished, there's some things that we're going to have to invest in invest in our businesses. So that's not what we're saying, that you are, like, you're going to make your bucket so small for expenses that it starves the business. That is not what we're saying at all, because I'm a small business owner as well, and I know the importance of, really investing in your business. However, we have to tell our money where to go. So we have to have a plan. We can't just randomly, make decisions, right, without a plan. And I know Marcella teaches core values. So just like we need core values in our personal lives, our business also, right? It's important for us to know exactly what's priority in what stage in our businesses. And so we have to map the numbers out ahead of time. Ahead of time. We can't find out later, what the numbers look like without a plan, right? We have
Yes.
to plan ahead.
That's so good. Thank you for adding that. And with that said, let's talk about, because we talked about profit, let's talk about cash flow. All right.
Mhm.
You talk about three critical drivers of sustainability, especially for healthy cash flow, that is. Would you kind of just take some time to unpack that? What is each driver and why it matters for business growth?
Yeah. So let's even just look at the three buckets that we really should be looking at in our business that's going to drive a healthy business, right? There's revenue, there's profit, and there's cash flow, right? So all these three buckets have drivers to them. So, and we want to make sure that we're in business to make money. And so we need to be aware of the drivers of revenue, we need to be aware of the drivers of profit, and we need to be aware of the drivers of cash flow as well. So I'm going to just go back to revenue, right? We, in order for us to bring in more revenue, we need the proper pricing, right? We need to make sure we have a lead flow, right? Coming into our businesses, right? And so I'm not going to go through all the five drivers that I teach, but just know that if you need you know the 15 drivers of 5 for revenue, 5 for profits, and 5 for cash flow, that is definitely something that I can definitely share with you if you reach out to me. But so those are two things that are going to be important. So you need to understand the 5 drivers of your revenue, and then make sure, just look at, what do I have in place and what do I need to put in place? What do I need to improve on? Not everyone need to work on all 5 things at the same time. What's going to give me the biggest return at this time? And that's how you know where to put your funds, right? Because you could have the best offer, you can have the your pricing right, but if you don't have a lead flow, right, then the offer, the pricing means really nothing. So you're going to budget now to spend more on increasing your leads, right? Does that make sense? If you're not, but you might be a popular person, you have a lot of leads, but you really don't have a good offer, right? Then that's where you need to spend your money, right? Is in improving that offer, right? So that's all part of the process. You were going to say something.
Let me pause because when we talk about pricing, and this is an area, especially for first gens. I think they start off with a struggle in this area. And you don't have to go deep into it, but I want to emphasize the fact that this is a driver, right? One of the drivers for revenue. But a lot of times when you don't grow up in business, you're the first entrepreneur. The struggle begins right there, doesn't it? Do you come across that with
Oh yeah.
first time entrepreneurs?
Yeah. Yeah, because Yeah, there are a lot of times that we feel like the lower we make the cost is the more people will buy, and that's not the truth,
Right.
right? And it's not good for business as well if you don't properly make sure that the pricing makes sense. You have to think about the time you're putting in, the value you're bringing, right? The cost of delivering the service, like all of that needs to be built into your pricing to ensure that it makes sense, or else there will be no profits, there will be no paying yourself, right? And so there are certain formulas that you have to make sure. At least you have to make sure that your cost is covered, right? So you have to understand what is the cost for delivering that service. And then you have to determine what is the margin that I want to make on this that would make sense, so that I'm running a profitable business, so I have money to reinvest, so that I can pay myself. All those things need to be factored into your pricing.
Very well said. Please continue with the drivers as you were right.
Yes.
Right. Interrupted you.
Right. So after we look at our
Revenue.
revenue and all the drivers of revenue, we also have to look at profits, right? What is going to make us have a profitable business? And that's why I love the profit first methodology, because it already helps you to lead with profits. And so because in order for you to have a profitable business, your revenue needs to be more than your expenses, right? And so we want to make sure that upfront we're already thinking about what profits we want to make, so that we can really look at and assess our revenue. And some of the biggest pieces of our expenses that really threatens a profitable, healthy business is team, so payroll, and marketing, right? And so it's important that you clearly understand, based on your industry, what is the average that you should be spending on marketing, right? What is the average that you should be spending on payroll? And of course, that also depends on the revenue level that you're aiming at as well. So all of that, are things that you need to be looking at in your business, and it cannot be haphazard, right? It can't be haphazard. We have to make sure that we are clear on our revenue projections. We are clear on the profit that we want to make, and we are clear on the expenses and how that breaks down. So we have, just like in our home, and I know you call it different to budget. What do you call your budget? Let's use that term.
Plan, but
So
cash flow system spending plan. Yep.
yeah, so we have to have, a spending plan in our business, in order to, make sure that we're driving a profitable business. So that's, really, really vital. And then we think about cash flow. Remember the example that I gave before, that debt is a big thing in terms of cash flow, right? And I would never say not to use debt. We just need to use it wisely, right? And there has to be a plan. There has to be a plan around it. And are we going to use our um personal credit for business? At first, we may need to, right? And which is why we have to, it's all intertwined. We have to manage our personal finances appropriately, so that we get better rates, right? Because we don't want all of our funds to be going, in interest payments either, right? So we have to make sure that we have clean credit. We have to make sure that we have healthy financials, because that's going to determine the rate that you get as well when you borrow. So that's a big, big piece of cash flow as well.
That's right.
That's
Oh,
a big driver for cash flow.
these were so good. I am hoping that we all got what we needed. You know, Dr. Ranelli, you work with me. I definitely had to shift my mindset around some of these things. But one thing, and it allowed me to get some clarity because I was definitely one of those people. I grew up in a family business and I understood the numbers, but having to operate a business and and build, so I'll put it this way, work on the business and work in the business, you know, that balance there.
That balance. Yeah.
Yes, and it was challenging, and I did not always have a team, and I did not always have what I needed to help support, what Mark and I both needed to support us. So it was wonderful when you came in and taught us the profit first method, and brought awareness of the things that we need to be paying attention to. One of the things that I want to make sure is that the listeners understand that you cannot be afraid to look at your numbers. You
Mhm.
and I think for individuals who start that way personally, because you can make a lot of money and still be uncomfortable looking at your numbers,
Oh yeah.
right? And
Hmm.
so if that's you, I want you to pay attention to that because Dr. Ranelli is talking about what you have to pay attention to, what you have to stay on top of. And the only way you do that is by looking at your numbers, looking at your statements on a regular basis, looking at your documents, staying on top of all your reports, business
Hmm.
reports.
Oh yeah.
And so it's necessary for those who do avoid it, um, we encourage you to work with someone like Dr. Ranelli who can provide you comfort in and really teach you a methodology that works for you and that's sustainable.
Yeah.
And that's what I love about what you shared.
And yeah, and one of the things that you touched on that I want to expand on is you mentioning about team, right?
Yeah,
So again, I want to go back to not make it sound like I'm saying shave expenses, which means that you're going to cut team and cut team. Sometimes you need to get team. You need to get team in order to drive the revenue up, right? But we have to plan for team. We have to understand what team is going to cost. When especially when you're moving from 1099s to W2 workers, know that you offering a person salary of 50,000, just calling a number, doesn't mean that your entire cost is 50,000, right? There's taxes, there's employer taxes on top of that, right? There's workers comp on top of that, there's unemployment, right? All those things need to be accounted for. But a lot of times you may need that team member to drive growth. We just need to plan for it, right? We need to understand where the money is coming from, right? Where the investment is coming from, whether it's reserves that you have created in the business that now allow you to have the cushion to bring someone on that's going to drive growth, whether it is that we're working on that healthy financials so that now we can get a line of credit that we can draw down on for the business, right? Um, yeah, so there's so much of a dynamic that a lot of entrepreneurs don't consider, and so they just automatically think, I can't afford to have an accountant, right? When I get the money, I'll get an accountant. Whereas an accountant, would be able to support you in structuring your business in such a way that, would drive healthy decisions that's gonna drive growth as well in your business.
absolutely. And I get the same thing. When I get my finances together, I will hire a financial planner. Uh,
And
or
that's
when
the
I
role of
clean,
a financial planner. They're
right?
gonna support you in getting your finances in order. Yeah.
Exactly. But you know, sometimes we don't like to expose ourselves. So I do, it does require a level of vulnerability. But I hope you understand, listeners, that 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 vulnerability, yeah, that is the emotional hurdle we have to overcome to build the team, to plan and then build the team that you need to get you to the next level. And that's the key for a legacy builder. That's the
Mm-hmm.
mindset that we must have. So, as we wrap up, I want you to talk to emerging millionaires listening today, Dr. Ranelli. What's what first practical step would you recommend that they take this week? Just this week, because that's what the why is in the legacy framework, your next move. So, what is a move to strengthen their businesses, cash flow, and the profit blueprint? Something actionable that they can begin immediately.
Yeah. You said it earlier, they can't be afraid of looking at the numbers, right? A lot of times, even people, especially with it being the first time that they're exposed to, high income, um, they're not sure, how to proceed, right? And so I would definitely make sure that your money has a job, you know, especially if you're thinking legacy minded and that you want to live, lead, and leave a legacy. You definitely want to make sure that you are clear on what your values are and what you want your legacy to look like. So maybe that's where I'll say to start is to get clear on what you want your legacy to look like,
Mhm.
right? Yeah, and I mentioned earlier that my dad passed a few months ago, Marcella.
Yes. Yes.
And I don't know that he necessarily said in his mind that this is the legacy I want to leave, but he certainly lived it, right?
Mhm.
I can definitely say that the way that my dad lived
Mm.
was the positive legacy that he left.
Wow.
He lived, he was such a peaceful, outside of the assets and the resources, right? He was such a peaceful, calm individual, and he left the earth the same way, right? Peaceful and calm. The other thing is that he loved his children. And I know us as legacy builders, we love our children. And so we need to leave that legacy as well. So when we would have when our time here on this earth would have expired, what would we have left behind, right? And now is the time to build that. You and I attended a conference, an event, a space with Dr. Danielle, right? And one of the things she had us do is take a measuring tape, and she had us, um, cut it in three parts. What's your current age, right? Um, and that first tape, we can't do anything about that. It's gone. It's done, right? She had us cut again at, just thinking forward, where do you think at what age would you die? We don't know. None of us know that, right? But, just think about it. Play the game a little bit. If you look at maybe your maternal grandmother, which is what I did, I looked at my maternal grandmother and my paternal grandmother, and they died, years apart. So one died at 96, one died at 82. So I took that, or 84. Yes, 96 and 84. So I said, okay, if I got the average of the two of them, maybe I could live until 90. Yeah, God, you could give me until 90, right? And so I had to look at my age between now and 90. That's the time I have left to build that legacy. And so that's what I would say is truly say. And then the rest of the tape was after I'm gone. So I had to look at what do I want what do I want when I die? What do I want people to say about me? What I want people to have experienced with me, right? And so do that exercise is what I would say. Do that exercise. And in the time you have left, which, for some people might be way shorter than the past, right? How do I make sure that that last piece of tape is so valuable, for the earth, for my children, right? And that would drive how you perform today,
Mm.
how you live today.
That was so good. And I thank you for bringing up that exercise we went through, Dr. Ranelli, because I still have my tape and I still look at it. That was so powerful. And sharing what you've shared about your father and the powerful and beautiful legacy that he lived and he left. It really goes back to, again, the L, and that's why we start with legacy lens in the framework. It is in order. That lens is about really getting clear. You said it, being clear on what legacy means to you, what it looks like, how you're living it, leading it, and leaving it. And, I bring up the example, and it was in episode 1 when we went through the framework. It's like, you wear glasses, right? And we all know, everyone who wears glasses, when that smudge gets on there, how annoying. You know how annoying it gets when you can't see clearly in your glasses because the fingerprints and all of that happens. You have to clear that off. And I think for a lot of us, our glasses, our legacy lens is smudged. It's not clear. It's all the distractions, the noise, the people telling us what we want or what we should want, our upbringing, our programming. The noise is everywhere. But getting clarity, cleaning that lens off, and being crystal clear
Yeah.
on what this is for, who this is for, your why. Begin with why, Simon Sinek. Start with
Mm-hmm.
why.
Probably why.
It's starting with why. And so I love that answer. So I'm going to continue with the legacy statement. I want you to, I'm going to have you end with all that, how people get in contact with you. But since we're talking about this powerful point right now, I would love for you to declare your legacy statement with us today. And this is something that I have all my guests do. It's an opportunity for you to have it out in the internet world. And we know what you stand for when it comes to legacy. So I want you to repeat and complete this statement. This is Dr. Ranelli Williams, and this is the legacy that I'm living and leaving in the world.
You would think I had that down pack, right?
So say the whole statement.
I'm going to say the whole statement. This is Dr. Ranelli Williams, and this is the legacy that I'm living and leaving in this world. It is the scripture, Proverbs 13, verse 22, says, "A good man leaves an inheritance to his children's children." So the legacy that I'm living and I'm leaving is an inheritance for my children and my children's children, but not just financial inheritance. I want to leave an inheritance of wealthy habits, of wholesome, wealthy habits. And we didn't get to talk about that, Marcella.
I know. I'm going
But
to have you on. I'm going to have you back for that conversation.
yes, it's a legacy of wealthy habits.
Mm-hmm.
Mm-hmm.
That's so good. And speaking of wealthy habits, because I want you to share with the audience what you have going on, how to reach out to you. But before we do that, we've worked together. Like I said, I'm your client, you're my client. You practice what you preach. As far, you are a legacy builder, and I've seen that. I've seen that in the efforts as you've worked with us to build that type of legacy for your family. You even got your family crest done. So yeah, there's a reason why Dr. Ranelli is here as a legacy expert, and that's because that is who she is through and through, not just because of all the head knowledge that she has, but because of her passion and everything that she brings out in herself exudes legacy. So thank you, Dr. Ranelli. Please share how our listeners can reach out to you.
Absolutely. So I am at Dr. Ranelli Williams, DRRANELLI Williams, on LinkedIn, on Facebook, on YouTube. We are starting a YouTube channel coming soon. So by the time this airs, you'll probably be able to find me there, and on Instagram. And our website, our business website, is www.erjservices.com. And so you can reach us there. Or our email is info@erjservices.com.
And what do you have coming up? Do you want to share anything?
Yeah, absolutely. So coming up, I have been working for the last 5 years or so on the book Wealthy Habits. So you heard me talk about, mention Wealthy Habits. And it's really for Christian entrepreneur wives specifically, just helping them navigate, 3 pillars: faith, family, and the fortune that we're building. And so I'm excited about that coming out this winter. I will be, launching that book, but we'll be starting pre-sales coming up here real soon. So you'll just check me out on social media and you'll see a lot about Wealthy Habits coming to the market. I'm excited about it.
Oh, I am excited as well. Listen here, you guys connect with Dr. Ranelli, connect with her on LinkedIn, all these platforms, so you can stay up to date with this release. You are going to want to get a copy of this book. I can't wait to get my hands on this copy. I'm trying to be the first one to have it. So just putting that out there. But I'm really excited for you. Dr. Ranelli, thank you so much for being on this show, taking the time to really inform and educate our listeners on these wealthy habits in business, profit, cash flow. And I know there's so much more that you could have shared, but we didn't have enough time. So that's why I want you all to reach out to Dr. Ranelli. But I truly appreciate just your vast knowledge and for you being here with us.
Thank you so much for having me.
Oh, you're welcome. Thank you for tuning in to another episode of the Legacy Pregame Podcast. Remember, if you are not already subscribed, you can do so by logging into www.legacypregamepodcast.com. You can subscribe and also download your free Clarity Pregame Workbook. Until the next time, live well, build wisely, and prepare with